I think we will see more countries joining together. It would take almost 2 weeks longer to do that. So all of these things are being put together strategically. You look at the 20 countries that have formally applied to the BRICS, 20, and they're all rich in natural resources or strategic areas of transport.
Welcome to an uncharted exploration with Andy Schectman in 2024, unveiling the triad, banks, bullion, and BRICS. Journey with us beyond the conventional financial discourse as we dissect the symbiotic relationships between the stalwart banking institutions, the enduring allure of precious metals, and the dynamic emergence of BRICS nations. Join this unprecedented conversation, charting the unexplored territories of the global financial landscape. So, keep watching, and let's listen to Andy again.
Well, I mean, to me, it would be an awakening by the mainstream, and I'm convinced that there will be some form of an event. I mean, there's so many things that are spinning out of control around us here domestically and equally around the world. And, you know, it'll go down, honestly, Dunnigan, as one of the greatest mysteries of my career, that as a father, I'm more concerned about the world we live in right now. My youngest child is 16, and I'm more concerned than I've ever been. And gold hit all-time highs last week in the London Metals Exchange and on GLD, and is completely and totally ignored by the mainstream. I will never understand it. This is as opportune a time in terms of premium and availability as we've seen in 4 years. It doesn't make sense to me. You put in the 2024 allocations where companies like mine have to make large purchases in order to stay in the good graces with the mints and the large distributors for 2024 allocations. And you're talking millions and millions and millions of dollars. So the dealers like myself all have really inventory levels that we haven't seen since well before 2020, and premiums that are in nowhere near reminiscent of what we've seen over the last couple of years. Yet I look around me and I think, I mean, does no one see what's happening around us? And I'm amazed by it. So I guess I would simply say I think it is an awakening by the mainstream into the virtues of an asset that is not someone else's liability simultaneously. And I think that's going to be a buzzword in 2024, counterparty liability, counterparty risk. And whether you're talking David Rogers Webb in his book, whether you're talking an over-leveraged, undercapitalized banking system, I just think that that's something that will come into focus. And it's hard for me to internalize and rationalize the fact that items that we're selling right now are the best value we've seen in a half a decade. I don't quite get it, but indeed, that's where we are right now. So I guess we'll have to see what the future brings. But I guess what really is unusual to me is that the public is unaware of what's going on in the metals market, and I wonder what it will take for them to witness that. And then from there, I think everything else unfolds as a byproduct of an expansion into the mainstream. Really quickly off the top of my head, number one, the real manipulation is not of precious metals. The real manipulation for the past really 40 years, almost exactly, has been of interest rates. Since 1982, they've headed literally straight down at a 45-degree angle, making stocks and bonds and real estate, you know, generationally lucrative bull markets. And that's an environment that I think is moving away from us. I don't care what the Fed plans to do and lowering rates through 2024. That to me is window dressing. Really, I think 2024 may be the year that people realize that the market is bigger than the central bank. The market itself, the global market, the desire to purchase our debt instruments, a country that's going to issue $1 trillion worth each quarter. And the amount of debt is insane. We have nearly $10 trillion worth of debt that is coming due to be paid this year. Well, how do they do that? By issuing more debt. And so if you rationalize this, forget it's a government, but just rationalize it on an individual level, it's insanity. And I think at some point, the realization that the market is more powerful than the Federal Reserve may come into focus. I see higher inflation. It's here to stay. I see higher interest rates ultimately. And just as bullish and remarkable the equity markets, the bond market, the real estate market have been in this falling interest rate environment, which has created massive distortions in asset prices. When you suppress interest rates and throw money at the marketplace in copious amounts, you get distortions in asset prices that I think will come into some form of symmetry with higher interest rates. So I think that we will see challenges in traditional forms of investment. That's number one. I just think it won't be as easy as it was for money managers to pick winners. Far more difficult in an environment that we find ourselves heading into. And also, it's a very interesting comment that Xi Jinping, or actually it wasn't Xi Jinping who made it, it was the head of the crown prince of Saudi Arabia talking about Saudi Arabia after the meeting with Xi Jinping. And he said, you know, the United States has been our most important trading partner for the last 50 years, but today China is our most important trading partner in the area of oil and in other things, and they will be for the next 50 years. And I think there was no coincidence in his use of verbiage. He actually said of the next 50 years. And well, you throw that into the mix of them now formally being admitted into BRICS as of January 1st. I believe that. So a situation of question marks surrounding the future of the petrodollar and what that means. We've talked about that a lot. And also an environment of higher interest rates, what that means, and inflation, what that means for traditional investments and their performance. I think both of these things, to me, will be fairly in focus as we move on through 2024. And I get it. You know, this has been a big party for the United States. We've lived well beyond our means, largely by the good graces of our foreign creditors, who I think are growing tired of the way that we conduct business. It's certainly not mutually beneficial, certainly, and it's more of a coercive type of partnership, if you will. And we are seeing pushback from that. I mean, you got Iran and Russia. Obviously, I'm choosing two countries that are being sanctioned by the West right now, but have formally said we're only going to trade in local currencies instead of US dollars for energy. This is a trend that we are beginning to see more and more and more and more. Obviously, we talked about the United Arab Emirates making that statement as well, that they want to only accept dollars for their oil moving forward. But this is something that we're continuing to see. And I think it will be very, very front and center as we continue down this progression of events. I think we will see more countries joining together in the BRICS and a coalition of other groupings. For example, the Eurasian Economic Union and the Shanghai Cooperation Organization, I believe, will join BRICS formally. The president of Belarus is calling for this to happen, calling for a summit for it to be put into place. You know, look, there's no coincidence when you see in the span of 1 year, Iran joined the Shanghai Cooperation Organization and the BRICS. And so when you talk about new relationships being built, largely based upon commodities and or strategic transportation routes, I mean, look at the Red Sea and the Straits of Hormuz, what's going on there now. Well, that falls right into the hands of Russia and BRICS and their northwest corridor and these new shipping lanes where they don't have to worry about the U.S. Navy, where it will be a permission-based alternative where you can get to where you're going instead of going around the Cape. I think the Cape of Good Hope, I think it's called, where it would take almost 2 weeks longer to do that. So all of these things are being put together strategically. You look at the 20 countries that have formally applied to the BRICS, 20. And they're all rich in natural resources or strategic areas of transport. And then there's another 20 countries we're not even quite sure about who have informally expressed interest. So I think it will be continuing of the same, of these relationships being built, of finding critical mass or mass adoption. And really, I think it's important for people to temper their expectations of instant gratification. It's a problem where people, oh, they didn't issue the central bank or they didn't issue the common settlement currency for the BRICS. It's a nothing burger. No, it's not. They're doing things in a very, very thought out, methodical fashion. And I think that's what we will continue to see. And that's why I'm so fond of the phrase logarithmic decay. Little by little by little by little, we continue to see this little by little by little by little happening all around us, whether it be here at home or with the continuing de-dollarization. And I think we'll continue to see that.
We conclude our expedition into the interconnected realms of banks, bullion, and BRICS in 2024, with unprecedented changes to global finance. A glimpse into the evolving financial landscape is provided by the intricate dance between banks, the timeless value of bullion, and the rise of the BRICS nations. The future is still a blank canvas. We need to stay tuned and curious as we continue to explore the dynamic evolution of our global economic tapestry. Please like, share, and subscribe to our channel for more predictions about the global economy. Thank you.